Hi, welcome to the Market Alert for Wednesday, the 5th of April 2023. So bad news is no longer good news as jacked up jobs data and Jamie Dimon jolt markets. Hope hits 21-year lows. No surprise there, is there? Tumbling jobs openings in the US hit cyclical assets for yesterday. Yeah, they came out lower. US stocks declined as weak JOLTS data stoked growth concerns. And gold and bonds soar after weak jobs data, manufacturing data, rate cut odds soar as well. And speaking of which, you'll see here, Australia Central Bank joins Canada in hitting pause on rate hikes. Is the Fed next? Well, blimey, this is a dangerous game, isn't it? Especially with crude oil moving to the upside as well. So more potential inflationary pressures. And yet they continue to do these stupid things where they're going to pause on increasing rates. So inflation is going to become either stagflation or hyperinflation. It's just insane, isn't it? And the current banking crisis is not over. Jamie Dimon warns of repercussions for years to come. Well, what a surprise. This is the CEO of a bank that was fined $900 million for the manipulation of silver prices. So there we go. It's probably the only honest thing that he's ever said. Anyway, economic news, Wednesday, ADP and ISM Manufacturing Services PMI, we're looking at 208, 242. So again, that's only going to add fuel to the Fed pausing rates. So let's have a look at yesterday's action. What turned out to be, or started off as being a quiet day, turned out to be quite an interesting one by the end of it. So in the Dow yesterday, you can see trading up to the 33,577 area that I'd spoken of in yesterday's alerts. We went back through it, but came back through it as well. Sitting at the 5-bar moving average overnight, the market will need to hold at this level if it is to move back to the upside. But looking at the 30-minute chart from yesterday, everything was going swimmingly until we had the JOLTS news, and then the market went south, as can be seen here. So it's unusual. I've never seen the JOLTS job data actually send the markets to the downside before. It's quite an interesting one, given that if you were to look at it from an inflationary point of view, came out better than forecast. They were actually lower, which meant that there was some easing in the economy, but not to be. Unless it's just been used as an excuse, I don't know. But very interesting that the market just dropped like it did. Traded up to the close of yesterday on the overnight and is heading down. So watch the low. See if this is taken out later during today. And in the German DAX, you can see prices trading up to the 15,707 yesterday. We spoke about this yesterday. We also had supply at this area before. Market back down towards the 5MA, but overnight below the 5MA. In the 30-minute chart, we had a really good move to the upside in the morning. And then this was followed by a straight move back down following the US once it opened and received the bad news of the JOLTS job openings. And then overnight, the markets traded up to the close, found resistance at the close and the 50 EMA, and is now moving down and has closed below 15,600. I thought it would have tried to hold at 15,700, but came sailing straight through this area and also Monday's high as well. Watch the 200 MA in the 30-minute chart and also the low, of course, because they'll try and bring the market back off this area. In the 5-minute chart for yesterday, if I can find it, there we go. Well, there's the overnight. Let's just discuss this while we're here. This is the market going through the close and then back down to the 15,600, bouncing also off that 50 EMA there, and then back down below the 15,600. And yesterday, you can see the activity in the afternoon there as the market sold off following the 3 p.m. JOLTS news, coming back below the 200. That became a resistance and down to the DP. That's, of course, after failing at the top end of this in the lunchtime. Yesterday morning, though, market rallying up, coming back to the DP and the 200 MA and the close. Very important levels. The market then moving up off this, as can be seen here. And in the S&P 500, trading up to the 89 yesterday, 4135.5, down on the overnight, also below the 5-bar moving average for this market at the moment as well. In the 30-minute chart, so you can see yesterday how the close was really important. The market coming off this, trading up to the R1, just through it, and then was met by selling. We then get the jolts all the way back down to Monday's low. We then get a retracement back off that low and then up to the close. Same pattern really that we're seeing in all of these. And now the market below the 4,100 level there for the S&P. In the FTSE, trading up to the or through the 50 EMA, but then closing back and then below the 5-bar on the overnight, also below 62% retracement, tying in with that 50 EMA. So a bit of weakness there for the FTSE. Everything started off swimmingly yesterday morning, trading up to the R2, and then we sat on the DP. We found problems at the 20-bar moving average, and the close was a good support. But once you've broken these areas, you then get an acceleration in selling down to the next areas, which we see there. We've got Monday's low, which the market went through, but it was picked up by the 200 MA and then stuck at the close overnight, finding a bit of support there at the moment. In the currencies, GBP, JPY trading up through the high to the left yesterday. Let me just draw that in for you, get the right bar. So we can see there that we went through the 166.006 and also through the 89 level, but the market selling off sharply there with the jolts, making its way back. This too is also below the, well, just coming back above the 5-bar as I record. In the 30 minutes, there's your move to the upside yesterday, getting through the high, driving all the way through. Then you get your retracement, and then we came all the way back down with the US market to the DP, taking out the high en route with big selling. That's how you get through resistance areas. They tried to buy back at this level but failed, and then down and then back overnight. We've seen the market coming off the low and now also coming off the close and back below the 200 MA as well. In the British pound, continuing to move to the upside there. It's a while since we've been at 124. If I just drag the chart across, you can see that there. Let me just reset this. And in fact, let me just grab a weekly chart of the pound so you can see. That's not the pound. Let's see if we can get a weekly chart of the pound. Have we got one? Yeah, it is. It is GBP USD. Yeah, this is the right one. Just losing the plot. Let's just put some other indicators on so we can see here in the weekly chart that we're above the high post truss, 124.44 for the pound there. So we have got this other one just to the left here as well. Which is 126.60. So make it 127, be easier to remember. So yeah, the pound up yesterday, down on the overnight, and the 30-minute chart, you can see we just rocketed up yesterday as the dollar declined with the crude oil situation, double top up to the R2 and then back, and then overnight the close has become a resistance for this market. Trading down to the DP and the 50 EMA, or in that area. Watch these two areas here because the market's likely to find some support. And in the US dollar, this continuing to move lower yesterday but finding a bit of support overnight. We're looking around an 89% or 78% retracement at this level for the US dollar. So in the metals is a rare sight. We haven't seen this for a bit. We had a breakout here back above the 200 MA with a similar 70 to 80 cent rise, but certainly a good move yesterday. And in the 30-minute chart, you can see yesterday coming back, sitting on the DP and then exploding with the jolts and then going through the high overnight but coming back as I'm recording. And then we've also got the 50 EMA and the DP for the market to find some support at if it continues. Gold also having a blistering day. In fact, have we got yes, we have got a weekly chart so we can see exactly where we are in the, this is the all-time high to the left. I'll give you the price in a second. We're just at 89% retracement there, but we need to actually take out the $2,070 level, but the market heading that way. We've already got the 89 out, so that's what we're looking at, 2070. If we can blow through this convincingly, then we could probably continue. But certainly a good day for the gold market yesterday. And the 30-minute chart there, you can see Again, massive move once we took out the high. You can see the buying coming in as well, supporting the market. Doing a lot better than silver overnight. Still just below the high, but above yesterday's close. And finally, in the gold-silver ratio, you can see the acceleration in the silver price yesterday compared to gold. This is down now to 81, having dropped from 92, which we saw recently. Well, so much for a quiet run up to Easter weekend celebrations. Keep an eye on what's happening today. Anything could happen, given that the market did this yesterday. Like I say, it's quite bizarre. For all of the 30 odd years I've been looking at the JOLTS news releases, I've never seen this sort of abreaction that we saw yesterday. So I don't know whether they just want to switch things up a bit. I really don't know. It's just very strange. But then again, we are living in the twilight zone at the moment anyway, aren't we? So anything can happen. Okay, that's it for this one. Have a great day, and as ever, thanks for watching. See you in the next one.